Once again, thanks for tuning in. Holly Shields here for Calcine Media. What are mortgage bonds? Let me fill you in. But first, please sub to our channel and hit that bell icon to stay ahead of the game. A mortgage bond is a bond that is backed by a mortgage pool of mortgages, such as real estate property or other tangible assets. The assets are considered collaterals of the bond. The mortgage bondholders have the right to stake claims over these collaterals. When a borrower fails to repay the debt, the bondholders can opt to sell the said assets to recover the payments that they must receive as per the contract terms. Mortgage bonds involve less risk for an investor because a valuable asset in these bonds backs the principal amount. In default cases, the bondholder can sell off the underlying assets to adjust for the default and ensure dividends, since mortgage assets provide greater protection to the bondholders as compared with the corporate bonds. They tend to yield a lower return. Traditional corporate bonds offer high yields that involve higher risks because they're backed only by the bond issuer's promise and ability to pay. When a person buys a home and backs the purchase with a mortgage, there are very few chances that the lender retains the said mortgage. Instead, the lender sells the mortgage to another entity, which can be an investment bank or government-sponsored enterprise in the secondary market. These entities then compile the mortgage with a bundle of other loans and issue bonds with mortgages as backing. The interest paid by the mortgagee is paid in the form of yield to the bondholders by the banks. However, bondholders may lose money on future interest payments if the mortgager pays their mortgages early. Thus, a mortgage bond is safe and is a source of reliable income generating security until most of the time homeowners in mortgage pool continue to pay their payments. A major drawback of mortgage bonds is that they offer lower yields to the bondholders, as their securitization of mortgages makes mortgage bonds safer investments. Yields from corporate bonds are higher than mortgage bonds. On the positive side, if a mortgagor defaults on a mortgage, then the investor can stake a claim over the mortgaged property. Furthermore, if required, the property in question can be liquidated with the proceeds to compensate the bondholders or investors. Yet another positive side of mortgage bonds is that they are a safer investment option than stocks. For example, corporate bondholders have little to no recourse in case of default, i.e. if the corporation fails to make payment. This is one important reason why corporations issue bonds with a promise to pay higher yields to lure investors into sharing the risk of unsecured debt. Plus, mortgage bonds also provide regular and frequent income to the bondholders. Mortgage bonds are generally seen as a safe investment option because they're backed by real property. For example, if a homeowner who has borrowed money from a bank or any other financial institution defaults on a loan or cannot pay the borrowed amount, the property, which is kept as a mortgage with the bank, can be sold to recover the loan debt. The ability to sell off the property to compensate for the default makes mortgage bonds a low-risk investment. Mortgage bonds carry less risk as the US government also backs them. This makes them appealing to those investors who are looking for sustainable growth in their income. Usually, the bondholders seek a steady source of income, which can be in the form of regular interest payments made by the homeowners. Moreover, investors mainly prefer safe and reliable investments which have consistent growth over time. As such, investment in mortgage bonds and mortgage-based securities are best suited to the needs of these kinds of investors. Now that you're up to speed, check out some of our other videos to boost your financial IQ. And if you like this info, please give us a like, comment, and a share as well. For regular updates, head to our website at calcinemedia.com. This has been Holly Shields for Calcine Media.